What's going on, YouTube? It's your favorite cancer patient. Time for another recap. We had a pretty interesting day. So, we're going to go over some of the wash statistics here and why we were looking at some pretty big over under levels here. So, we're just going to start on the QQQ, right? And on the QQQ here, we had a pretty big opportunity to see some early signs that we were going to kind of be dead. And I'll go over those real quick on the Qs and the volatility index. So, first off, we're going to start with oscillation. After the pre-market high was hit, she kind of walked itself back down to hitting this red dash line. This is the 50 SMA on the daily chart, just coded into the intraday. So this came down to that 50 and just hugged that 50 SMA daily all pre-market and launched itself down. Okay, we had a really big teal zone up here at this greenish zone where if we had stayed under this, we were bearish. Over this would be bullish, and this was the last kind of attempt here on the daily chart that we would see kind of holding that 10, because right now we're kind of working on some of the gaps on the backside. We were looking for this gap fill later on in the morning, coming down under that 50 SMA. And of course, as we've covered multiple times in the videos, coming down into this gap, and a back test of the 100 EMA, since we had zero interaction of confirmation, was a huge percent chance, right? So we finally got that breakdown back under the 50, no 10 loop. So most likely we'll continue that selling down to the 100 EMA. Now, what were some keys here that kind of gave us some signals this morning that said we're going to dump? One was the 50 SMA. The other is we had some interesting algos with no tag. So you know us, we draw our Fibonacci boxes here like so. And then we look for stuff to stay inside the fib box and then roll back up, right? And usually we look for a golden pocket hit, but right here we had some really small histogram waves. Oh, my fat head's in the way here. Had some pretty small histogram waves here. On that pre-market, you can see it just kind of fleeting on the MAC. So it's lower, 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 crossed, RSI broke under the 50, cross. So we're getting some confirmation there on the oscillation indicators telling us that we could go down, also with the fib. So once we broke under our nice little fib box that we had here, it was kind of game over to that downside, because if we would have stayed inside the fib, we go to the golden pocket for the long. If we break to the upside, we go down. Now we had a really, really lazy low break right here, and then this lazy lower high. Couldn't even get a pop to short into like the teal level, the back test. Couldn't even catch the 100 EMA. So we talk a lot about shying here as well as the fib boxes. So shying is something when something can't even come back for a back test, can't even be bothered for a back test of resistance here. Let's take a peek when we zoom in. At the open, the 666 on the 5-minute was not tagged. 50 SMA daily in the red was not tagged. 100 EMA, 200 SMA, you get it. All the moving averages had shying. Shying means we did not get a pop, obviously, back into it. It shied away and ran away. So that is a huge precursor to furthering the continuation strongly on trend. And we had zero bounces, just perfect controlled sell, consolidation over and over again till gap fill. Gap fill is right here at 465.11. And this is that first daily gap we're talking about. So I was hoping that we come back in and get that long. We actually caught a long right here in our group, as it's the first long, as we posted on X as well, into the gap where we were going to get a scalp. And then I was hoping for the full gap fill and then a scalp. But we got both of those, which is great, because those are just scalp trades, because we had to do really, really fast trades today on the way back down, because we did a lot of counter trending. And this counter trend trade right here coming into the gap fill on the daily was the reason that made this great. So this first one that I had taken right here is like 24 points, even though it ran almost 70. And the second one for the actual gap fill, 465.11 right here, goes through and up, was another 68 points or so on the NQ, because we always trade off the Qs, but we access our trades on the NQ, right? And now we're going to look for the bounce through the afternoon because of the gap fill. So this support right here at 465.11 is the gap fill. Now you're going to look for that reset back up and hopefully chase down at least a VWAP. We're going to go to the 1 minute chart here, and we're going to look if we have any kind of moving averages chasing where we could actually get a confirmational back test on real quick. It'll be the 100 EMA, it looks like, yeah. And then the 200 will be that one. So the 1 minute chart holding the gap, you're going to look for that little bit of a climb back up. We shied the 100 again right here after that gap fill, but that's that gap fill we were talking about first tag. This one we shied it, right? Then it ran up a little bit, trapped the longs, came back down, killed off those longs that weren't patient enough to wait for that daily gap fill at 465.11. So when that gap fill hit right here, I said, everybody get a long scalp in. That's when you're going to get it. Hit the gap fill. long. And again, on Q's got about a point and a half. 40 points on NQ equals 1 point on Q. So this is 60 points to the upside right there. Huge scalp. And then, of course, kind of ran away and continued. So if we do find support at the gap fill here, those two scalps worked out really clean. And most likely we're going to hit that 100 EMA, jerk back around, and maybe find the 200 SMA on the 1 minute. Best case scenario for that long. So let's talk about why else we've seen that coming here. And the VIX was the tall tale sign for the manipulation here. When you see stuff have mass divergence, like this guy. Now, what you see here is the VIX not respecting any kind of oscillation indicators. So the standard deviation was pointing down, and this morning, you see these green lines. Now it's slightly pointing up. Everything was kind of pointing like this, and then you get your zero line, and these are red, and the standard deviation is pointing to the downside because it's in a downtrend. But we've seen this push back up, and I said, yeah, the VIX is definitely going to push the standard deviation to the uptrend, which is going to turn these green, which it did. And now this little area of effect of the VIX is what you got to focus on. Now notice this right here in the pre-market range of time here. Came up to a hot, right? And then the entire reset of the RSI came down to the halfway point, the 50, because we play everything in 50% here on the channel. And then it popped up again and just kept going and going and going. Same with the MAC. We found a hot spot on the MAC, came all the way down to the zero line support and then up, telling us that the bearish oscillation indicators are super strong because they're in the top channel. They're above the 50 RSI. We're above the zero line on the MAC. Now, counter-trendly, we can look at the dollar giving us huge signals off of mass supportive standard deviation as well. Once the daily and weekly -2 standard deviation was recovered in the dollar after a big squeeze, we've seen this continuing all last week for higher lows and higher highs. Now you have two very big bear catalysts there. The dollar really giving it away last week, gearing up for the end of August into the September dump, which is historically accurate. And then the VIX, last but not least, showed you this indicator reset where these MACs and RSIs came down to their support zones from the top of the channel and then just ran with it. But notice, this is the biggest takeaway on why we've seen the manipulation coming. And this is what I posted in my Discord for the group. And I said, if you pay very close attention here to the consolidation, you notice no price action is dropping in the VIX one bit. Nothing. We're not going to get any highs really either, just a couple little peaks. But what it did was it just stuck in sideways consolidation support as strong as can be, super strong for the VIX. As the RSI came all the way down, zero reaction to the price. MACD all the way down to the zero and popped. This is huge divergence. And we've seen this coming. It was like right here. And I'm like, yeah, guys, this has been falling for a little bit. We're just holding up. We're most likely going to stand sideways. And VIX is going to have a monster push out of the gate because of that. And then, not consequently, you can see the oscillation indicators on SPY as well. Very similar, right? So we had some algos this morning. We used some Fribs, same thing, but you've seen it drop after that hotness, complete sideways action, right? And we got some pretty ugly stuff here. I'm gonna go to the 5 minute, and that's why it's so ugly. I was like, why are we so choppy here? There we go. Then you see this here again with that 5 minute chart being the best time frame for us. This consolidation allowed the full cool on the RSI back to resistance and then down, being on the bottom side of the RSI. You would see downside more likely. Same with the MAC, right? So confirmation was everywhere. And during this consolidation weakness period here, we were seeing some nice retrace the RSI back to the 50, and thus right here telling us that we were not ready for swapping the channel to the upside. So we had to stay in the downtrend narrative, right? And then again, shying away on SPY of that 100 EMA, 200 SMA. We did open up into the 666 here, but Qs is a bigger driver. We lost the 10 SMA daily, and then off and away she went, right? So with that being said, we're going to look for the continuation on the gaps on the bottom side. If you take a quick peek here at SPY on the daily, we don't have too much else for SPY here unless we get cooking on. Oh, let's get a little cleaner chart here. There we go. Cooking for this gap to the downside. Now remember, the moving averages we spoke about many times the last couple of weeks on video said needed a back test. When you see price action go flying through these moving averages, the 100 EMA right here, the 50 right here, notice they never came to a back test, right? Just blew through and see ya. Same with the 10 SMA. So the second the 10 SMA does its first hit, which we had already covered a couple, last week in our videos here, we explained this whole thesis. Same happens with the 50. So the gap and go of the 50, this is now going to most likely break and return to the gap right here. And the 50 SMA daily. You can see the histogram on that backside on the daily. You can see the dive in the RSI. And we might, get a hold day here and there. Might get a little green day, a little hold red, little stall because the 50 RSI might come into support right there into that halfway point and then, do one of these, which is fine. It's no big deal. They hold your shorts. But I think we're going to go for the gap in the 50 SMA daily this week on the short week, especially if data produces that move. So if you guys found any value in today's video, like all, you want to support the channel, links are in the description for Apex and Top Step accounts. If you want to trade live with us here at Boiler Room Trading, we narrate and trade live all morning, every morning, not all morning, every morning, not all morning, to about 11:30 a.m. Central for the nice volatile open. And then I'm in chat, and then we come back for power hour and chat a lot of the times and just keep track of the market. If that sounds good to you, maybe we'll see you in chat. If not, we'll see you on the next YouTube video. You guys take care.